Markets are choppy, uncertainties everywhere, and investors are frustrated. How do you adjust your portfolio to accommodate these shifts while staying on track with long-term financial goals?
Yeah, one of the things that is really helpful with the Index One platform, which houses the BX strategies, is in real time. We can see what's working and what isn't working. And so that gives us a real good idea of, as of today, what asset classes should we be overweighting and underweighting. And just a simple example of that is, the European strategies have done real well all year and the US growth strategies have done very poorly all year. And so as of today, that trend is still in place. And that's why it's important for us to monitor that, closely and see as trends are changing.
We like to think that it's important to build, resilient portfolio blends from the get-go, which means the term asset allocation maybe is a little bit trite, but what that means is finding assets that are uncorrelated to each other that are likely to perform well when what performed well last year isn't, right? For example, we've created a number of portfolio blends at BX that have held up far better year to date than cap weighted benchmarks when in the last couple of years people said, oh, you can't beat a cap weighted benchmark. Well, a number of our strategies have, but the secret sauce is to find things that zig when other things are zagging. So one of our 30 stock models, which is a simple blend of 3 different strategies, is only down a couple of percent year to date versus the carnage in the market because the high dividend component is doing great and the international component is doing great. So even though the go-go growth sleeve on the US, large cap growth side is doing poorly, the other 2 are doing so well that the portfolio is basically flat in a terrible market. And that's what we like to work to build with advisors.
When we're building models with ETFs or SMAs for clients, rule number 2 is really to make sure that everything isn't going in the same direction all the time, i.e., find things that correlate differently. I think maybe rule number 1 is what kind of an environment are we in? So we're sort of in a bearish environment for US large cap and US growth, but we're in a very favorable environment for, like you said, dividend growers and international. So rule number 1 for us is always like, hey, what kind of environment are we operating in? Rule number 2 is, do we have assets that that will complement each other when we put them all together in a model or into a portfolio?
Join us on Thursday, April 24th at 11 a.m. Eastern Time, where we'll explore all of the BX strategies and all the blended strategies to navigate today's uncertain markets.